In this video we are going to talk about best dividend stocks to buy in 2021. So before starting this video, please like this video, subscribe and turn on the notification to our channel for future updates. As 2020 began, it looked as if it could finally end the long era of rock-bottom rates. But in that perspective, the pandemic quickly threw a wrench, as the unemployment rate soared from 3.5% in February to 14.7% in April, and in March the Federal Reserve cut interest rates to zero. Since March, the 10-year Treasury return has also been less than 1%, and revenue investors have few attractive options once again. Here's a list of 12 best dividend stocks to buy in 2021. 12. Grief GEF. With a $2.3 billion market capitalization, industrial packaging and container company Grief, as the smallest company on this list, can provide a dividend portfolio with some mid-cap diversity. This is a slow grower, but the stock is decently priced with a dividend of 3.7% and a price-earnings ratio of less than 18, particularly with analysts expecting earnings per share (EPS) to increase 10% annually over the next 5 years. This manufacturer of steel and plastic drums, corrugated sheets, container liners and other behind-the-scenes packaging products will see a rise in demand if and when the global economy picks back up. The products of Grief are used by all kinds of industries, with, to name a few, customers in the pharmaceutical, petroleum, food and beverage, and chemical sectors. 11. AbbVie. AbbVie, the pharmaceutical giant, is a repeat pick among the 15 best dividend stocks roundup, having previously appeared on the list in 2020. With only a few trading weeks left in the year, AbbVie stock has earned its superlative, with a year-to-date gain of about 23%. AbbVie currently sells Humira, the world's highest-grossing blockbuster drug, with a market cap of more than $185 billion, which treats a number of ailments, including arthritis, Crohn's disease and plaque psoriasis. The company's acquisition of Botox maker Allergan, which is expected to close in mid-2020, adds to its portfolio diversification. AbbVie pays an enviable 4.8% dividend. 10. J.P. Morgan Chase & Co. JPM. 2020 has been a down year for banks. Interest rates plunged, narrowing the all-important spread between what a bank pays to borrow cash and what it charges for loans. Even J.P. Morgan Chase & Co., the most valuable bank in the U.S., valued at around $365 billion, was not immune from those headwinds, falling by mid-December by about 13% year-to-date. This is a good time to buy for patient investors looking for a safe asset with a good yield. J.P. Morgan Chase pays a 3% dividend and has a favorable payout ratio of 47% as one of the 30 Dow Jones Industrial Average members. J.P. Morgan reported a 30% rise in trading revenue in its wealth management division last quarter, along with record revenue and net income. 9. PepsiCo Pep. The beverage and snack giant PepsiCo, a company with impressive diversification across geographies and business segments, is another of the best dividend inventories to buy for 2021. Pep's Frito-Lay North America division accounted for 26.6% of total revenue in the 36 weeks ended September 5, trailing only its PepsiCo Beverage North America segment, which accounted for 32.9%. Coca-Cola Co.'s biggest rival, PepsiCo Pep, lacks a strong food and snack division. And, while Coca earnings Cola's per share fell by 33% last quarter, PepsiCo's grew by 10%. Pep pays a dividend of 2.8% and in 2020 is up about 6% versus Co's approximately 4% decline. 8. Discover Financial Services DFS. Discover Financial Services, the credit card company, lists the top 15 dividend stocks to purchase for a second straight year. DFS is the smallest of the 4 major credit card businesses at $25 billion, including Visa V, $433 billion, MasterCard MA, $321 billion, and American Express AXP, $96 billion. In some ways, this puts DFS in a better position than the other companies, as there is more market share to be had. Of these 4 companies, DFS also pays the highest dividend, at 2.1%, and with more commerce moving online and away from cash, credit cards in general should continue to increase market share in 2021 against other payment methods. DFS has a payout ratio of 54%. 7. Cisco Systems CSCO. Cisco, a blue-chip stock worth $186 billion and a Dow Jones Industrial Average component, pays a 3.3% dividend with a 57% payout ratio. For 9 straight years, the company has increased its dividend and continues to be a true cash cow throughout the pandemic. Operating cash flow increased by 14% year-over-year to $4.1 billion in the most recent quarter. Cisco also returned $2.3 billion last quarter to shareholders through stock buybacks and dividends. The communication equipment company, which essentially creates much of the plumbing that allows the internet to function, should be a long-term dividend stock. 6. Mondelez International MDLZ. For several reasons, this $80 billion snack food behemoth is one of the best dividend stocks to buy in 2021. First, the business is extremely stable, which is what most revenue investors want in their dividend stock picks to see. Mondelez enjoys broad brand recognition and loyalty with a portfolio of brands that includes Oreo, Cadbury, Toblerone, Halls Candies, Trident Gum and Tang powdered beverages. Second, with 69% of its revenue coming from outside North America last quarter, Mondelez is a great way to add some international exposure to your portfolio. MDLZ pays a dividend of 2.2% and has a payout ratio of 54%. 5. Crown Castle International Corp. CCI. Crown Castle International Corp., the second right among the best dividend stocks to buy for 2021, operates in an increasingly important niche of the market, owning, operating, or leasing more than 40,000 cell towers in the United States. Its assets cover every major U.S. market, and CCI represents an investment in vital infrastructure for telecommunications that keeps Americans connected to data, information, and each other. The towers of CCI will also be a key component of the rollout of 5G or 5th-generation technology as those efforts are picking up in coming years. CCI pays a dividend of 3.4% and is up by mid-December by about 10% in 2020. 4. AT&T. You can't discuss the country's major telecom behemoths without mentioning AT&T. It owns a sprawling media empire that includes Warner Bros., HBO, CNN, TBS, TNT, Cinemax, and DC Comics, among others, and is the second largest telecom company in the United States, behind Verizon Communications (VZ). While AT&T will also play a key role in the 5G tech rollout, the company's unprecedented decision to offer all 17 of its 2021 theatrical releases, including Space Jam: A New Legacy, The Matrix 4, and The Sopranos prequel film, called The Many Saints of Newark, should drive up subscribers simultaneously for streaming on its HBO Max platform. AT&T pays a generous 6.8% dividend. 3. Antero Midstream Corp. AM. Alarm bells should go off whenever you see a dividend as high as Antero Midstream's. The stock yields roughly 14.7% as of mid-December. Usually, there's something wrong with that image. Either the dividend is cut, the business is in free fall, or some other risk looms. As a result, Antero Midstream is arguably the most dangerous stock on the list. It's the second smallest company on the list, with a market capitalization of $3.8 billion, and it's not currently profitable, as natural gas prices have only recently begun to recover after a drop that lasted much of 2020. A global recovery from the pandemic would also do wonders for the stock price of AM, and analysts expect that next year the company will return to profitability. 2. Newmont Corp. NEM. Newmont Corp. earned a spot on this list after being named one of U.S. News' 10 best stocks to buy for 2021. Gold, silver and copper miners yield a modest 2.7%, but if their mining operations produce unexpected windfall profits, they have vowed to reward shareholders with special dividends. In recessionary environments, Newmont's value as a hedge makes it an attractive member of a larger portfolio as it has a low correlation with the wider market. NEM's beta is extremely low, at 0.16, indicating perfect correlation to the market at 1 and no correlation to the market at 0. In 2021, Newmont projects that its all-in cost of mining an ounce of gold will be $970, with the Fed likely to continue its easy money policies and gold prices hovering around $1,800 per ounce since July. NEM appears to be a good investment. 1. Kimberly Clark Corp. KMB. Kimberly Clark is a classic defensive consumer stock, a relatively boring company that can be expected to produce steady profits reliably. Diapers, baby wipes, tissues, toilet paper, paper towels, soaps and more are part of KMB's everyday household products. Kimberly Clark, one of the most time-tested stocks on this list, has been around since 1872 and pays a 3.2% dividend. Its payout ratio is a modest 61%, and for the 48th consecutive year, KMB raised its dividend in November. That implies that KMB is one of the dividend aristocrats of the S&P 500, a list of companies that have raised their dividends for 25 or more straight years. So that's it for today's video. What do you think of our list? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button and turn on notification before you go. Thanks for watching.